I'm tapping in real quick, man. Listen, as always, I got a jam-packed video for you guys, so please keep it locked. Please make sure to like, subscribe, help this video get at least 1,000 likes. So without further ado, let's go ahead and dive into it. All right, guys, I'm busting open the charts, man. I'm kicking it off with Bitcoin. Really quickly, man, I just want to drop this word on you guys. Listen, we told you that September typically, now overall, September has done pretty well. Okay, let's not mistake that fact. But we are starting to see cracks. We are starting to see signs.
I love how everyone says September doesn't do well, and Chris Haynes says it does
well. This is what we was talking about when we talked
I
about
like
historically what happens in
well.
September. But here's the thing. Here's the catch for me, okay? Remember this. When there's blood in the streets, it's time to eat. We are looking for and anticipating to get the assets we know, like, and love at lower prices. Let me know if that's understood. We looking for these prices to come back down. Everybody say rinse and repeat. Okay, we are looking for the September. It might even spill over a little bit into October now, okay, because this whole month outside of this week has been up. Okay, so we are looking for asset prices. So for example, check this out. Look at Bitcoin sitting at 109, 109K. So we already know Bitcoin gonna go to 120, 150, so on and so forth. That's neither here nor there. How about
Richtech,
you make
Robotics.
sure we look for an entry at a lower price point? So say 104, say 98,000, say it loses the 100K level. Now we gonna get a bigger return for those that jump in, for example, from 98,000 even to 120. But we already told you the destination is 150K and then eventually 200K. All right. So be thinking strategically. And if you can get it at 100K and then it's sitting at 200K at the end of the year, that's a double up just like that. That's a double up on just shares alone, not even if you guys are playing options. So listen, this is a critical warning that I need you guys to take heed to. This is where you make your bones, okay? So this is where all the lessons about risk management, using your stop loss, using your trailing stop loss, taking some profits, not letting green turn red. This is where all that come into play. Check this out, guys, the SPY. All right, now I talked about this in Discord this morning. It is currently sitting at 658. This one was down $3 on the day. It lost the 660 support. And I told you guys, if we lose 660, look for this to come to 358. Okay, it came down, I think, to 355, maybe even 354 for a quick moment before bouncing back up. Now we're sitting at 658. So tomorrow, you're going to have a battle at 660. It's going to see if it can make this $2 moves in an upward direction to see if it can recapture 660. If we can, that's a good sign. We can go higher. If we can't recapture 660, everybody write this down, then that becomes resistance. And that simply tells us we're going back down to 665 and potentially lower into next week. Okay. I want these things to be things you understand on your journey so that you can know how to properly position yourself. Okay. So the SPY, matter of fact, everybody be in the Discord first thing in the morning. I am going to break this down. When pre-market come, we are going to get a window into what the market is trying to do. If it's gaps lower, then we already know, man, it's going towards that 665 support. If it go under that, boom, we lost that.
Okay. That's true. It is good to look at the gaps overnight. That can change setups. If it gaps up, you're kind of a little bit behind, right? If you're looking for a breakout. Let's jump into a little breakdown here on Richtech Robotics, RR. And this is the chart. This is sort of the opportunity here. There's a lot of momentum here. Not really for the faint of heart. And then let's see what we can bring up in terms of sort of more structured news here. I don't want to look at this. It's not really fruitful or constructive. All right. Believe it or not, ChatGPT is the best way to filter through news, as opposed to a site called News Filter. All right, let's jump into this breakdown here. If you're on X, head over to YouTube. You can drop questions in there. I can see all your questions, by the way, from X or YouTube. But YouTube is obviously sort of home base. Welcome in on this Tuesday, last day of September. All right. There is one stock that is about to break out. It is a robotics stock that has a robot in a humanoid type form factor. So if this is the direction that Tesla is heading, this is a tiny company that could become the next Tesla. There is a short report out on this company within the last 48 hours. Let's check on the short report, see how credible it sounds, and look into where this company is price-wise, as well as what they are doing. If you haven't hit that subscribe button, hit that so that you get notified of new batches of videos, all right? You only get a few notifications a day. Check it out.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here is a little bit about the company. They basically are selling robots to China, okay? And they're going to be added to, well, they are added to the Russell, which we can see over here. So here's the Russell. That's a small cap index. IWM is pretty much follows the same price action, and we look at that as opposed to looking at the NASDAQ or the tech index, the QQQ, or the SPY, which is affectionately called the market by most. Here's the stock that might explode, break out. Let's take a look at the price action here in just a moment. First, we'll jump into a little bit more about the stock, but this is sort of the play. It's retraced a significant amount. There's a level over which to buy, and you can see it retraced over here, and then we had this move, so that's kind of the idea. Get another move. Before we jump into that, it's a lot of volume here. Let's jump into a little more about what this company does. So this is actually the subject of this short report. In a sense, is they have a sales agreement with a Chinese company. So that's great until there's a US-China tiff, and this company's sales go to zero if China pulls out. So there's also this Form 4 is the SEC Edgar form that notes when people sell. So this executive sold 100,000 shares, so it's like $500,000. So, you know, maybe that's a lot, maybe that isn't, but on a company this small, it is notable, and people will see that. So that could have a dampening effect. This is kind of the dealing we're dealing with here is a lot of dilution risk, right? But they don't have cash, right? So they got some cash, 100 million, and the number of shares to be traded is a lot. It's 100 million shares. So typically, if this were like, 1 to 10, you'd be a little worried in terms of buying something like that. It could just come right back on you. And if we look down, why is that dilution risk so high? Well, in the past, let's say, a few months, they've raised $70 million, okay, which is great for the company. But what it means is that the price goes down when they raise. So that's because they're selling shares into the market. So if we actually look at those days, August 11th and June 30th, well, June 30th is somewhere in here. After that raise, the price did go down a bit. So it doesn't look like much, but when you're actually in the middle of it here and you're thinking of buying here, which I wouldn't see any pattern here, but if you did, you'd lose about 20% of your investment, or almost. And then August 11th over here, now, actually over here, in this case, this was bullish, okay? So that sort of checks out if the raise was at $2, although it's possible, it's actually probable, it's almost certain what happened is there was so much buying activity that it just overwhelmed that amount of selling. So that's the dilution risk. It could go down. There could be so much buying that it doesn't matter. But if we want to get super granular, we can. And we can say they sold about 10 million, 20 million. Let's say they sell another 10 million shares, which would be a large raise given that the price is like 4 times this now, $2. It's up at like 8. Well, actually it retraced significantly. It's over only at 4. Got a little exuberant here. So if they sub 10 million shares at $4, it's a $40 million raise. That'll increase their cash like 40% because they have 100 million in the bank, right? So that's somewhat reasonable that could happen. It's only 40% more cash than they have. So let's say they raise it here and it's 10 million shares on a day that trades 40 million. You can see the net volume down there, 40, 50 million. 20% of the shares will be sold shares. They're selling them into the market. So when you add 20 million shares to a float that's 100 million, essentially what you've done is increase the float 20%. Well, a little less than 20% because the float's a little above 100 million. But so you just got to think about that in terms of selling pressure. It's significant. If it were just, say, 5 million shares, you only have 5% more sellers. You know, whatever, that could be the same as some big retail guy coming in who has a $30 million account and just saying, I want to dump my, $5 million position, $10 million position. But it's not 5%. That would be 20% if that were to happen again. So that's the risk, in short. You could have another drop like we saw here. But if there's so much buying activity, like at the one we showed here, the stock could still go up. Okay? Now, let's jump into a little bit more of exactly what this company does, aside from the dilution risk. But the reason we talk about dilution risk so much with these tiny companies is that we don't really need to know what it does in order to make money off it, right? It's either going to go up and make more money, or it's not. And these returns in terms of revenue are so small that doesn't really help us. Like, what are we supposed to do? Build a cash flow model off of what is basically a startup that has $4 million of revenue? That's ridiculous, right? But here's the deal. This is sort of the glint in your eye. If you look at this company and you want to hold it long term, which I don't suggest. I suggest holding it for like 3 to 5 days and then selling half, and then you can hold the rest if you're in the money, if you're making money. This is kind of what you have to keep in the back of your mind. Even if they execute in China, given the hurdles there, that whole market could get shut out from them. And in fact, this is sort of the challenge, okay? The short report mentioned the rebranded Chinese robots. This is sort of really pouring it on, but I would say the part that is scary is, this Walmart contract being misleading. and being a small pilot in a single store is a little bit scary, given that there are a lot of sort of direct-to-consumer brands, and because calling this robot company a direct-to-consumer brand like it would be a deodorant or something, like a native deodorant or a Dr. Squatch. But I mean, we're just investors. It's great that they're doing complicated stuff in terms of technology, but that doesn't really matter to us. So, look, here's the deal. The short interest is usually delayed, how many people are short the stock, so we can't really read too much into that. But the fact is that this is sort of normal. 30% would be worrisome. And you could look at small changes, but again, it's because it's delayed, by a couple weeks at best, I would say, maybe more, longer than that. You can't really read into that. So we already talked about dilution. That's aggressive share issuance. We know where is weak revenue. We've never realized what it is. It's a small company, and this sort of exaggeration of the Walmart agreement, it is what it is. It's like if you say you have a collaboration with Walmart and it really just means they're setting you up on as like the end cap on one of their aisles, like next to the bananas or whatever. It is what it is. We kind of already expect grandiose statements from founders and stuff like that. So press releases. But in terms of, just not really being able to verify the revenues at all, like it's fine if they're small, but not knowing if they're true, that is a little bit of a problem. So this is what they reported, and they also reported a number that was down 20%. So that's for the quarter. So this would check out. This would be for the full year in the last 12 months. So this is the challenge, right? If this is true, that's okay. We can buy a company that's using China as its sort of guinea pigs to test these out, and then eventually bring the technology into the US. But if this isn't true, then we really can't be buying this shell of a company, even if it has momentum, right? It's just too risky. Again, if this is true, this is great. This is insane, right? 60% gross profit is software margins almost. So that's sort of the worries. Is it a letter of intent, non-binding letter of intent, or is it, hey, they wired us money and we have some units that we need to ship them because they just wired us money? It's a big difference. So we'll see what happens. It would be great to get some contracts in the US that are of that size that they can announce, even if they don't announce it with a big name. They don't need to announce it with a Walmart name on it. So I'm not trying to I almost feel like I'm pretending to be worthy of advising this company, when really all I'm trying to do is give some ideas to you guys as to, is a $4 stock that has $4 million of revenue that's from a sales agreement with a Chinese company worthwhile to buy? And after all that said, if we knew nothing about this company, we have to say, okay, this is a ton of revenue. It has a history. If we look as far back as we can go, we can't go farther back than that. But recent uplist, I believe, maybe I think it's an uplist. I don't know. It has a history of making big moves. Okay, this is $1 to $5, and IPO wise, that's sort of on par with this Figma move. Although it's completely brain dead to compare Figma, which is like a multi-billion-dollar revenue company, to a little uplisted Chinese. I guess I can't call this it's not an ADR, so I won't call it an ADR, but it is a company that is recognizing revenue from China. Okay, these two words put together are dangerous. There's been a lot of news stories, and you can look at the charts too of stocks that have done crazy China moves. TOP, XXII. It's two relatively recent last few years examples. So all this to say, for the eager to buy, I got to put on my optimistic hat here and say, look, here's a level to buy. It's bouncing off this moving average that's rising. And there's a reason I'm talking about it. I mean, it can make crazy moves, and it's 100% in less than a month, okay? For any account with less than, $20 million in it, you can put a quarter of your account, $5 million, in this stock, and definitely not be at risk of moving the stock any more than maybe 20 cents or more. Someone who has put $5 million into this stock can, fact check me on 20 cents of slippage, putting a 5 million position in, but you get the idea. There's a ton of liquidity right now, and you can risk off this moving average or off this high, which is about the $4 whole dollar number level. You do have this high of $6. This all-time high is super high, and then, this is basically $6 here anyway. So $6 is a really important level. And to say it super simply, because at the end of the day, that's what we do. We simplify, we oversimplify actually. And that's what an investor does. So you risk 20 cents and you make $2 or $3. So maybe make 10 times what you risk. That's the whole idea here. And that's the level, right here at $4. We're a little above it right now. So that's the spot to risk, 20 cents, and try to get over this $5-6 high, make $2 or more. All right, I could talk about this all day, but I would be repeating myself. If you like these stock ideas, head over to stockscommunity.com. You could try it out for $25 for 7 days. Ask your questions in there. If you're looking for like a flood of stock ideas and chatter and like a Discord party, that ain't it. It's a place for you to ask questions and sort of have a long-term view of trying to beat the market each year, consecutive years, many consecutive years. So give it a shot, $25. If that's a lot for you, please don't join. Seriously. And if you haven't hit that subscribe button, hit that subscribe button so you can stay connected. I will see you in the next video.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, let's jump into some more Chris Sane here. We'll try to keep it hypey here.
Support that opens the door for 650. Okay, if we gap up, that tells us a different story, and so we will take what they give us, but we will all know what they.
I just saw this comment on YouTube about RVPH.
Okay, this is the SPY.
Ooh, does have a lot of volume, but seems to be selling volume.
Okay, the triple Qs. This
we'll just note that here as well on YouTube.
Stocks and techs was getting wrecked today. Okay, so they were down $2.50 to $5.93. They are identical to the SPY in terms of how they move. If the SPY is down, this is down, so on and so forth. Okay, so same thing. If you are going to trade,
okay,
so Nvidia,
good
Apple,
old
AMD, Tesla, you need to be having an eye on what is
this
happening.
Thing's basing up here,
because you will get a window once again into how your individual stock will perform. But check this out for me, guys. I need you to understand what's at play. We look for the pullback, not in a panic mode, not in a mode of that the sky is falling. No, that ain't what this is. This is opportunity. This is what we look for. The lower the better, but you can't panic. You can't lose your shirt, okay? The lower the better, because then when we make the end of year run, aka the end of year rally, the prices you get here will be how you do it. So do me a favor. Let me know if you made money today. You should be making money in both directions, ideally. Okay, so if you made money to the downside, let me know. If you made money when plays were going up temporarily, if you were able to catch something like that, you let me know that. Secondly, guys, let me know if you have your dry powder ready. Okay, let me know if you have your dry powder ready. And more importantly, let me know if you are ready to go shopping when you see blood in the streets. Okay, guys, this is a mindset thing. This is not the time to panic. This is not the time to jump ship. This is how it's done. Okay, this is how we do the do. This is how we make the money into the end of the year every year. But typically, the market would have been doing this the whole month of September versus right now. So I need you to don't get caught off guard. This is something that we have tried to prepare you for since January, telling you that September like to do this. So now here's where you put your skills to the test for me. And then lastly, guys, make sure you sign up for Moomoo. The link for everything you need is in the description below. Make sure you get your Nvidia up to $1,000 worth for that. Make sure you get your money inside of the cash account, getting up to 8.1%. Do those things, guys. You want to have your affairs in order on this journey, okay? So listen, man, we're going to get up out of here. I want you to make sure you are properly positioning yourself for the ultimate run up when that time come back around, okay? Y'all stay tuned. Y'all keep it locked, man. I want to say job well done. This is where the money is made during these times, okay? Nothing you can do on all-time highs every single day, but there's a lot you can do in terms of getting in position when you finally get that pullback. So make sure that's understood, man. Use your trailing stop loss. Use your stop loss. Manage your risk. Don't let green turn red. Don't overstay your welcome.
Solutions,
Make sure you cut your losses if you need to. Reposition and be prepared to make that money back. Listen, guys, we make videos like this every day. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget, like, subscribe to the channel. Make sure you guys grab some free stuff. Use my link below. And I'll catch you guys in the next one. Peace.
All right, let's jump into a little breakdown here on none other than AMD. This is a massive stock. Let's take a look at what they've been up to recently and why it's a good time to buy. I didn't randomly pick this one. Do you believe it's a good time to buy? And we also have a statement from Lisa Sue to listen in on. So let's jump right in. We do have a recent move on Nvidia. Talking about a breakout here, as well as this OpenAI deal was here, and then Intel. This is the Nvidia investing in Intel, so gotta love it. Looks coiled. So here we go, guys. Let's do a little breakdown. Drop those questions, comments on YouTube, and we'll jump into AMD. Your comment does not have to be pertaining to AMD. There's one stock that is about to skyrocket, in my opinion, with all of the euphoria around OpenAI, ChatGPT. We saw the massive spike in Oracle stock. We saw the massive spike in Intel stock when Nvidia made an investment in Intel. Nvidia itself had a spike when it purchased OpenAI, essentially invested 100 billion in OpenAI. OpenAI bought Nvidia GPUs. They're all buying Nvidia's GPUs, okay? Nvidia is the hot hand right now, and there's a reason to pick up what has traditionally been the juggernaut of the chip companies right now, because it's been going sideways for a while. It's been underlooked, and it's poised to break out. Let's take a look at that. If you haven't hit that like button, hit that so that the YouTube algorithm can find this info. It might be a little bit less hypey as I ought to make it. And let's go.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here's AMD, okay? And the reason we're talking about this is, if we zoom in, this company has essentially gone sideways for 3 months now. Well, 2 months, 2 full months, August and September. Got bought right back up after this drop here on the 4th. And this is a super, super low risk entry. If you knew nothing about this stock, you could say, well, how hard is it to buy at 160, 162, risk 160, risk a few bucks and try to make 10, 20, 30. Maybe you sell half of it, 10% up, hold half for, until one of these lines catches up. You can see how this line is slowly catching up. That's because it's going sideways. So once the stock starts to go down or sideways, these lines start to catch up, and then you could just use the line to sell. You don't have to freak out and overanalyzing all the different pieces of news, and you don't have to set a price target for when you're going to sell. No, you use the lines. That way it can go like it went over here. It can go up and then down. It can go up and then down. It can go up and then down, up and then down. And this whole line, it's still above the line. So it just makes it super stress-free system way to invest. Now, why we're picking that company? It's totally not related to systems at all. It's related to this CEO who has a seat at the table with Nvidia, Sam Altman, and the president. And this company is huge, okay? 4% of the AI chip market is not a lot, okay, compared to Nvidia, which is the 4 trillion company, but it's still 20 billion of annual revenue. And there is reason to believe that AMD is going to start to capture some of Nvidia's demand, basically, because Nvidia can't itself fulfill it. And AMD is the best competitor to basically take over that demand. So OpenAI is an early design partner for AMD's upcoming GPUs. So that tells you all you need to know. If OpenAI is coming up at a valuation of $500 billion, they're burning 100 billion or so, if not more, over the next few years in just training costs, almost entirely GPU costs. So that's bad for OpenAI. What that means is they're spending it on Nvidia and soon to be, it sounds like, AMD chips. So if you like the growth of Nvidia, then you have to say, what kind of growth? I mean, this is a stock that went from 50 to 200 just in the past, year and a half, just about 18 months. And in the past 18 months, what did AMD do? Not much of anything, okay? So AMD's been around. This company is not a spring chicken. So this collaboration with OpenAI is essentially saying, hey, sure, we're not Nvidia. Okay, we didn't go from essentially $10. This is the split is included in this chart, of course. So that's the 10-to-1 split. So this is when Nvidia went from, $1,500 to $150, and you guys get how split works. So $2 stock that went to 200, okay, in 5 years. There's a reason for the exuberance on Nvidia. AMD over that period only, instead of 100x, it 10x, okay? But you know what? That's still pretty good. And for people that don't want to buy Nvidia at all-time highs, I was sort of championing this, and I can't say that I'm not going to validate your inability to accept that you have to buy stocks that are up a lot after they've gone sideways if you want to be in the leaders. But I will say, if that's the case for you, fine. There is an opportunity that offers low risk that's very similar to Nvidia, and that's AMD. And this is the spot to do it. So that's the technical reasons to do it. And then we can actually hear from the CEO as well to sort of satisfy every sort of type of learning, technical, visual, I guess, auditory, whatever. I'll just play this for a bit.
Let's talk first about the AI accelerator outlook, because actually from analysts to investors to the developer community, when we say that you're coming on the show, we get questions from all quarters. You had said that the AI accelerator business will grow to the tens of billions. And what I'm kind of seeing is people just want granularity from you, Lisa, a little bit. Like, when does that happen and where does it happen? And you talked about the hyperscalers, but what's the growth pathway to tens of billions in accelerator revenue?
Yeah, absolutely, Ed. So let me give you a few important markers. So what we said is the second half of the year, our growth would be primarily driven in the data center by accelerators. We launched a new product just in June, MI355 product. It's extremely competitive. We really like how we stack up in terms of total cost of ownership for inferencing and training workloads. Customers really like that product. That's driving some of our second half growth. And certainly when we talk about our sequential growth into Q3, that's being primarily driven by that accelerator capability. And
so if you've heard of Google's TensorFlow or tensor processing units, that's the Google's GPU is called a TPU. They had to own their own acronym. So now AMD wants a piece of this pie as well. And this is the argument that the AI accelerator total addressable market will top 500 billion in the next 3 years. And so if they have 4% of the sort of accelerator market right now, the AI chip market, same thing. Her argument is, I'm sure, that this number is going to basically quadruple, and they're going to have, say, 12% or 15%. So it's a modest argument to make. It's not unbelievable. And with companies like Grok, GROQ, this is a reasonable argument to make that the next OpenAI, the next Anthropic, the next Claude, whether it's the gigawatt, AI data center power plants companies.
You see a good engineer?
Or whether it's sort of the engineering-centric actual chip companies who build these new AI accelerated chips. The next $100 billion company is not going to be an LLM company. And fine, AMD is already a massive company, but another argument is to say the next Nvidia is going to be basically AMD, okay? So Nvidia is about 20 times this market cap. So AMD doesn't have to do much to grow some into those shoes. So we'll just finish this out and then we'll talk a little bit about the chart and where to get in.
And now when you extend forward, I've said that the AI TAM for accelerators and data center will be over 500 billion over the next couple of years. We expect to get a large portion of that new accelerator TAM, and that's how we get to tens of billions of dollars. Very key is also, we've accelerated our roadmap, and so we are on an annual cadence. And next year, we'll have yet a new capability with our MI 400 series, which will bring full rack level solutions, which will be another giant step forward in terms of capability for AI solutions. So I think that's the roadmap and path for the next couple of years. We're really excited about the traction. We're getting lots of customer validation saying, hey, you're on absolutely the right path. And we're making strong progress towards those goals.
So customer validation saying you're on the right path is a pretty huge deal to hear that when your customer or your design partner is OpenAI, okay? A company with a 50 billion or above annual demand of your product, consumption of your product, 50 billion of revenue that they could pay AMD potentially. Maybe it'll be split among Nvidia and AMD forever, or there's no forever, but we're talking about the next 5-10 years. But if AMD can just slightly grow from, again, 4% of that AI accelerated hardware market, then her argument is totally intact. So, as far as some price moves, there hasn't been anything that we can't really intuit from the chart, except for earnings, okay? This was a challenge. This is Q2 earnings. Q2 earnings was challenging for a lot of companies, but particularly these Chinese chip tensions. So basically, China doesn't want us to beat them. There was the whole DeepSeek thing, which was pretty rough here when there was thoughts that this whole AI boom was overblown, and in fact, this is where DeepSeek was, somewhere in here. So Nvidia actually preceded the market tumble, which was the tariff tumble, and AMD did the same. Okay, so that rollout of DeepSeek, the AI algorithm that purported to use, say, like 10 times less or more times less of the power, or it's basically 10 times more efficient, that ruined these public company stock prices. OpenAI isn't public, so we didn't see the stock price go down, but we saw it in their customers, okay? So now we're back up here, and with all of those multi-year plan growth ideas out of the way, we're zooming way in here from macro to micro and just saying, here's where we're looking at. If we want to drive these lines back, we can, okay? And we can say, yes, this is sort of a relevant line somewhere, and the 160 level is definitely relevant. Hit it here, and here we are, right over here. There's a reason I'm talking about this stock today, or, this week or next week. It may still be here, but it's a slow mover, 3% a day, but it could go at any time. So this is the opportunity. Risk a couple dollars, make 20, 30. And if you hold on to half your position and trail it with one of these lines, you could get another 100% or more move with, I say half your position because I do recommend you sell half, 3 to 5 days after you jump in there, because so many of these stocks, even Nvidia itself, does have pullbacks where, if you got in here, you could have sold a little bit here. I mean, it's only up. This is about 10% actually. You might have sold off half here, and then if it goes down, maybe you sell out and you make a little bit of money, even when you miss the actual big breakout. So that's how people stay in business. The liquidity is so insane that someone with a $10 million position or more could have done that little maneuvering that I just described. and maybe a much larger position even, 20 or 30 million. So I'm not joking around here when I'm talking about 3 to 5 day moves. So with all that said, that's the technicals. We talked about the fundamentals. We even listened into the CEO. And if you like these sort of stock ideas that are zoomed out and zoomed in to being actionable for you, no matter your account size, head over to stockscommunity.com. You can join for $25 for 7 days. I will mention what I think is the highest probability setup the morning of. Of course, you can ask any questions as well, and I can help tell you everything that we know. There are people that might know more than us, but they probably work at Citadel and Goldman Sachs. So if you like the idea of that, head over there, try it out. And if you like these videos, hit that subscribe button, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Okay, let's jump into a little bit more Chris Sane. I know we've got him queued up here.
YouTube. Hey, I got our next big play on deck. I told you it was coming. It is here. If you guys are ready to make some money, let me know that in the comments below. Class will be in session, so watch this video and follow it to a T. I'm going to change your life with this one, okay? Listen, our next big play is here. I'm going to show you what to buy, where to buy it, the whole nine, and I'm going to chart it out for you. I can't afford you to miss this one. If you got any losses that you need to make back up, this will do it. If you haven't had no losses, but you just need to make money, this will do it. For those of you that want to get towards and close to your goal, 10K, 20K, 50K, 100K, this will do it, okay? I did this for SoFi. I did this for Palantir. I'm going to do it for this particular play. Let's go ahead and dive into it. All right, guys. I got it pulled up. Without further ado, I am a technical expert.
Lift is actually shaping up. Okay. Don't love it. It's a little extended, I think, but it's interesting. UNH is also kind of interesting here.
In a matter of hours. I'm about to show you this particular play, ticker symbol LYFT. Everybody go to this, okay? This particular play, I'm showing it to you now because the setup is there. I don't care nothing else about but the technicals. I am a technician. That's why I don't miss. Let's go ahead and look at this. Hit trade options. I don't care what platform you are using. You get to the option chain. Go all the way over for me to 2027, January 15. Now, y'all already know how coach play. None of my plays take this long. But I can't afford to see you guys miss. I'm going to change your life. Some of y'all going to get off the corporate plantation with this. But one thing I love about this one, we hit over 180% on Nvidia this year. I did the same exact thing. I'm about to do it for you guys then. This is the important part of being early. Everybody going to join the 100K challenge January 1st. But y'all going to already be in and up 100% by January 1st. Look at these prices. Okay, now this play, everybody write $20 target number 1, $30 target number 2. So you're going to change your life just from here to 20. But this play is going to 30. I taught you guys about Uber when it was $20. I told you Uber is going to 100. Uber is now at $90. Follow these teachings to a T, okay? I'm a technician, so you ain't got to worry about if it's going to work out. It's going to work out. I'm not guessing. I'm not gambling. This is technical, okay? So my probability is much higher than everybody else's, okay? Watch this. You got the strike prices of 17. You got the strike price of 15. I need to teach you this. You know I have a system. If you rock with me, we buy an 80 delta. Let's just go through these. Let's click 15. so I can show you the delta. This delta is 71. That's not bad. This delta is 71. That's not bad. Okay. Let's check out the $12 delta, 82. Coaches delta is always 80. This is 82. This is right in line. This is around $7. Okay. You can get this at 15. Let's look at 17 just to teach you guys. 64. That is still good.
Okay, let's not get too excited about options here. Just because you can lose a lot of money really quickly. Alright, let's jump into some United Health Group info. Because the stock is bottoming. I generally don't talk about stocks that are down so far, but it is interesting and everyone seems to have eyes on it. So here we are, you know. This is the chart. I mean, depending on where people bought it, you could be up 30%. It's getting up towards the level where more people could buy it, like me, who tend to see stocks that are above that green line. And if we type in UNH over here, we can see Medicare Advantage enrollment is coming up. So I don't know how actionable this is. They're talking about a CNBC article. That seems pretty boring. United Healthcare CEO talks. Oh, that's kind of a fraud search. Maybe there will be something more relevant here. Boy. Think there's a little bit more stock information. Wow, this is rough. I don't even know who this is though. Raymond James, Director of Healthcare Research. Probably gonna pass on that one. Okay, who is KKM? CEO buys 25 million stock. Yeah, you know. Alright, we can listen in here. This is somewhat interesting.
CNBC contributor Jeff Kilberg is KKM Financial's founder and CEO. And Jeff, you own United Health, is that right?
I do, Kelly. It's an essential name. If you look at all the healthcare providers, there is no other company besides United Healthcare.
He does have a way of speaking that's believable, so we'll go with it. I do think most interestingly is the Buffett buy, of course. So that has to be of top importance, but yeah, you know, this is relevant as well. All right, let's jump into a little breakdown here on good old United Health. Sorry for that little pause on the old screen for a while there. If you do have any questions, drop those in the YouTube and we can speak to those live. All right. There's one stock that is about to break out, in my opinion. The company is down a ton from its highs. I can give you an exact number in just a second. And everyone's been talking about it for 6 to 9 months. When is it going to bounce? When is it going to bounce? Well, it started to bounce. The capitulation appears to be over. And now it's setting up for another opportunity with low risk to buy it. So if you missed out the first opportunity to buy United Healthcare, UNH is the ticker, when Warren Buffett bought it, well, guess what? Now you have another opportunity. Let's jump into the chart And if you haven't hit that like button yet, help the YouTube algo find these videos. And let's get started.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's the Buffett buy. Okay. 5 million shares might not sound like a lot, but it's over $1 billion position. And he had previously sold this United Healthcare in 2010. So he's coming back in, looking for that gold when everyone else is selling. Buffett buys. So his buy was down here, and when that info came, well, actually, he could have bought back here. We don't exactly know when his buy was because it got disclosed at the end of maybe the quarter. I mean, that doesn't totally make sense because the end of the quarter is now. So this is when his buy was anyway, and the stock definitely went up. People got all excited that Buffett bought UNH. Of course, it hasn't really done much until now when we're finally seeing the type of buying and selling that makes someone excited again, which is sort of price agreement, like, oh, it's definitely supposed to be higher. Everyone wants it. Oh, we don't want it that much. Oh, but we do want it. No, we don't quite want it that much. Oh, but we want it. So this is how much people want it, and then this is going to start moving. So at some point, buyers step in, everyone's just going to decide, okay, this is actually not the range that is an accurate price for this stock. It's actually worth a lot more. And of course, it was worth a lot more until this gnarly sort of Medicare dispute situation. So let's jump into a little bit about that. It's not fun to talk about, but it's pretty important. This was bad. Okay, rising medical costs that outpaced revenue. So basically everything that people say is wrong with the medical system. United Healthcare started to, they weren't totally causing customers to have a bad time. Okay. It was costing more on their end as well. Okay. I'm not gonna try to play both sides here. I'm just putting on the investor hat and saying, look, this was a problem for this company that we're trying to buy. Okay. Potential Medicare fraud, the F word. This is bad too, but this was back in 2024 and this drop was in April. Okay, so it actually held up through all the tariff stuff because I have to assume it's because best businesses are healthcare and education and, well, not Chinese education. Let's see what that Chinese education company did not do so hot. But this is sort of an anomaly. I shouldn't have changed the subject like that. United Healthcare was doing fine with the tariffs, and then the Medicare and rising costs just crushed them. Okay, so it wasn't entirely understood by most people. I think we can all agree on that, why it went down this much, but people were trying to buy it here, here, here. You see, I tried to buy it here, here, and then finally dip buyers, if they were somewhere in here, found the bottom. But really, a lot of buyers came in after Buffett bought it. Okay, we can see some of that volume here. This is selling volume. You see how this line is red? And we see the stock went down too as well. So we know that's a bunch of people selling. So yes, every sell is met with a buy, but that still sort of indicates that it's not like the kind of volume over here that comes with an increase in price. That's about as straightforward as we can say it, right? I mean, people bought it. You can see how many people bought it. The stock went up. So as far as the actual price again, we can jump into that in a second. It's kind of boring, but as far as United Healthcare, yes, it is this company. Okay, so they also have that sort of tailwind going against them. And then they have had some revenue declines. So this was the big catalyst, okay, Buffett buying it. And we can sort of look at the big names that are in the same breath. Humana, right? Cigna, I know that one. And CVS actually just broke out, which is kind of good. I mean, it wasn't really a breakout, it sort of failed actually, but it definitely looks like it could be getting towards a level that's interesting. At least it's not breaking down. Cigna doesn't look great. And Humana, is that HUM? Doesn't look great either. So all these stocks are sort of not, this is not a hot sector, but it hasn't been for a while. So, I mean, if we look at, this is April, if we look at Cigna in April, started going down in April as well. Humana started going down in April as well. So they all sort of dragged each other down. I think UNH definitely bore the brunt of it, but that's why we're talking this as a bottom bouncer opportunity. And to look at the price levels, the reason it's interesting now is you can give a stab at it. You can risk a few dollars and you can make 20, 30, or even more. And, you know, just to get up here is more than $30. And this is typically where most people even start to look at a stock, is when it's over this green line. And the reason they do that is because, well, let's take a look at some stocks as an example. Once a stock gets over the green line, it starts to get a lot of buying activity. And we can sort of verify that some more. Look at some other random stocks. Look, this one literally, Netflix bounced off the green line. Now, was that the tariff bottom? Maybe it was, okay, but we can just start to see some patterns here, and I'm talking about the most consumer-facing, well-known stocks. Spotify, again, you know, a little above the green line, but so what is this magical green line? Well, it is the 200-day moving average. There's nothing super special about 200 days, except it's widely the default for a lot of brokerage charting softwares, and I'm sure it became the default from people in the trading pits, and even before that, talking about 200 days being one of the first or one of the most widely used indicators. We don't have to read too much into it. Let's just say if you open up Robinhood, it's going to have this green line on it, and you didn't even put it on there. So that's why we want to keep an eye on it, because the more people keep an eye on something, the more it is likely to have an important price move around that line. And we could give an example. Let's look at Tesla. There were millions of eyes on this base. People have just been licking their chops, being like, all right, when is the Trump Elon stuff going to get over? When is the Robotaxi stuff going to get really exciting? When is FST going to be so exciting that people are just gushing about it? And bam, that's what we're talking about. You can risk a few dollars, well, maybe $5, and you're immediately up 50 in 2 days. That's kind of what we're looking at here. We have a tiny version of that here, but that is the idea. So, is there a perfect day to buy it? No, but this is a pretty good time to take a look at it. PBMs are kind of the profit centers and also under scrutiny. Even a Republican administration, particularly Trump, who's obviously a bit of a wild card, he's not stoked on these things. The public is not stoked on them either. I think private equity likes them. I think as investors in UNH, maybe we're sort of on the private equity side. I don't know. But we do have to keep an eye on that. And if all these Americans lose coverage, this company could lose quite a bit of money. I don't know exactly how likely that totally is, or whether this is sort of fanfare, you know, sort of showmanship or whatever. I mean, the government always has shut down, and then they miraculously don't shut down, right? So that's not really super worrisome. And then if the CEO did buy, this is the CFO, but the CEO did buy 25,000 shares sometime back in here. So I believe below the current price. I'm pretty sure of that. So that's the buy. Those are the times to get in. I'm not going to go out on like a 20-year chart. I'm not even going to look at these 5 years ago levels, because that's just, it's getting super unlikely that people will be looking 5 years ago. They could be. I could be wrong, but I think the way to go is basically just to say, look, there's a flag forming. It broke out above here. Now we're getting up to this green line, which coincides with 375. So all you can really do say is this an example of what's to come? Is it about to do the same thing? It's bouncing off this red line, which is a 20-day moving average, and you can get in, risk a few dollars, make 20, 30. That's the idea. If moving averages seem like they're totally a new concept to you, you can ask questions about that. You can ask questions about any stock ideas. Head over to stockscommunity.com. You can try it out for $25 for 7 days. Give it a shot. And the best stock idea will be in there each day. It's not a day trading room, so there's not just going to be flying ideas of, hey, I just saw this piece of news. Hey, this stock already went up. For example, today, Lithium America went up, but that's not helpful to you to know that it went up and that the government took a stake in it. What we try to do is find stocks before they go up. So it's not exciting, but we do try to follow that mission. And if you like these videos, go ahead and hit that subscribe button. And if I continue to be able to speak, then you'll learn something from them. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump into a little bit more of this United Health
contributor
story.
Jeff Kilburg is KKM Financial's founder and CEO. And Jeff, you own United Health, is that right?
No, this is just going to depress me, actually. Chris saying, here we go. This is
Do
optimistic.
not pick a play that don't have these deltas. This is what you don't do. Do not go way up here. Yes, it's going to 30, but don't choose 35. Okay. In this particular case, because it's out so far, you can get away with it. But I'm talking about if you're doing plays that you're not following from me, don't go way. That's called out the money. That's too far. You need to be, look how close. Look at the price in the middle and look at the two prices above and below. You need to be in the range or deeper.
There we go.
Lower.
There he is.
Okay, that's called deep in the money. Or just shoot for 80 or 70 delta and your plays will hit. That's number one. Okay, so do me a favor. We're going to choose $15 call for this particular play. So everybody hit 15. Okay, watch this. You're going to hit buy. This is a 71 delta. So I already know off top this play going to hit. Off top it's going to hit. Why? Because the technicals told me it's going to hit. So this play will cost you $500.
I keep moving Neo down because I don't want to make the video.
So don't ever think you need a bunch of money to get in.
People just get so
that need to double your money, you buy
passionate about Neo. We'll put it that way.
Triple your money, you buy 3 contracts.
There it is.
Coach is going to buy. I always buy 100 minimum or 200. That's just how I trade. You don't got to get 200 like me. You can do this just to test my theory out. But I have shown you SoFi, Palantir, Netflix, Meta. My list is long and strong and I can keep going. Nvidia, AMD, Google, Amazon. I do this. So do me a favor, guys. Get this 115.27. Get a 71 delta on this, okay? This is the $15 call. All right. So that is the play. This is where you buy. This is the strike price you choose. this is the stock you choose, okay? I'm giving you everything because I need to see you win, because guess what? I can't wait to turn up. I can't wait to celebrate your success, okay? Now check this out, all right? Here is how Coach No and does this. If you've been with me for any amount of time, this is not new. You've seen me do this time and time again, okay? Okay, guys, now we about to dive into the charts. We are going to pull up, I have lift on a 1 week time frame. I need you guys to see this. This is where we are at. This is where we going. This is $30 right there, okay? That is the target that we are shooting for.
Can't even tell what stock this is.
Way higher. You got this target right here you could shoot for, and that's all fine and good. But I want to just show you something that's
he'll
more
tell us
realistic
again.
and
Sorry.
attainable. And once you get a taste, you will see for yourself how this is done, okay? So your job is to be patient. Do you see this black line right there? This is how I gave y'all SoFi. Everybody, when I was teaching you guys about it at $7 and $4, this is where it was at. Now it's at above $20, and this is how you have changed so many lives, okay? So we got the double bottom here. We are trying to break this. Soon as we break resistance, boom, we're going to get a break. This is called bump and run. We're going to bump, and then...
Okay. This is kind of dull. So let's jump into a little breakdown. If we're going to be dull, we might as well be dull about stocks that I think are about to go up. This video is actually a little delayed, the one I'm watching. This is from a few days, 4 days ago. 2 weeks ago, actually. It's a while ago, so. We can get a little more up to date, and I think Palantir is the stock to talk about right now. There is some fundamental reasons that it's interesting as well, but of course nothing super recent. Does have that connection to Big Bear AI as well, and I don't exactly know if there's anything else we want to find out about Palantir. I guess talk about similar tickers. But they're mostly smaller stocks like KTOS, drone stocks. Palantir is, yeah, this Anduril's private, but we can look at Lockheed Martin. And, oh yeah, C3II is definitely in the same breath as well. IBM is slow moving, so kind of ignore that. This is a big number, $1 billion. Alright guys, let's jump into a little breakdown here. This is incredible. After Q2 earnings, it's all the way back near its high from August. So if you got any questions, go ahead, drop those on the YouTube. I will see those, and we can get going here. Of course, more important than the chart is what they do, but everyone knows what they do. So there's one stock that is about to reach all-time highs. The stock is Palantir, PLTR. Palantir has been an absolute juggernaut. Did have a little bit of a slip up on Q2 earnings, sort of digested, went sideways for a little bit, but now it looks to be approaching all-time highs again. This is how to get in before it hits all-time highs, and what price levels to look at, as well as recent news. If you like this video, hit that like button, help the YouTube algo find it. Here we go.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Okay, so here's Palantir. Billion 5-year partnership with the UK. This is like the Department of Defense for British people. The UK. I guess that includes whatever it includes. Ireland, Scotland. I'm sorry. That's not super important that we exactly tie down what that is. But $1 billion is a ton. And Peter Thiel is obviously already really close to the US government and Trump. There are concerns that it's at all-time highs, of course, and it's a question of with the whole Golden Dome project, is a company like Lockheed Martin going to take a piece of that, which certainly has been on a tear recently, but if we zoom out, they're just barely sort of rebounding since last October. So this is the Nvidia of defense stocks, Palantir. And yes, it would have been great to get in 2 years ago, 18 months ago, to get 1,000%. But now you're sort of in the same bucket as an Nvidia investor, asking yourself, hey, a stock just digested for 2 months, all of August, all of September, just breaking out. Here's Palantir. Basically, not so much digested. Obviously, it's been going up, but honestly, it's been pretty choppy, so it hasn't been super easy to get into. There were spots like after earnings where you can sort of get position, but maybe that works for you, maybe that doesn't. And since then, it's been not super simple. You know, I just mean it's not like an opportunity like here where you can risk a level, get in, and then you just sort of have a stress-free move up. It's been kind of up and down. But the good part about right now is you are getting up to a level where you can risk it, risk a few bucks when the stock gets up here and then make $10, $20, $30. Of course, you could even zoom in right now and do that here, which is why we're talking about it here. You could risk 178. Risk a couple dollars and make 20, 30. I'm not totally randomly picking levels. I mean, I am, but this was important. You can see this little compressed day here. Anytime there's a compressed day, it means there's a lot of agreement between buyers and sellers as to what the price should be. So when the price moves away from that day, it really picks the direction. And here it really picked the downwards direction. Here it looks like it's going to pick the upwards direction. So we already got a little hint of it the last couple days. So that's the technicals. We don't really have to harp on that because it's at all-time highs and there isn't a lot of bag holders at all, and there definitely aren't any bag holders overhanging except for just from a month ago who bought on this earnings candle and then got absolutely owned. See, I actually bought on the earnings candle as well. I kind of got chopped out, but coincidentally, it didn't go anywhere anyway. So let's talk a little bit about Palantir now, what people are saying. Commercial sales to exceed $10 billion and government sales to exceed $8 billion by 2030, 5 years from now. That's pretty massive. It's not Nvidia size massive. This is not a $4 trillion company. This isn't even an AMD size company, a $250 million company. But it's getting there, actually. I mean, what is Palantir market cap? Certainly is not totally agreed upon what this company should be valued at because it's so new. It's kind of like a Tesla bucket of company. So actually the market cap is higher than AMD. It's slightly lower than OpenAI's private valuation. So this is a juggernaut. And there are little sort of sympathy laggard companies that are moving off of it. And BBAI had a partnership with Palantir. And so you can kind of look at BBAI as a proxy for hype in defense stocks generally and hype on Palantir. And, you know, maybe this is sort of euphoric and hey, you're like, I don't want to look at a $2 stock. Why are we looking at this? It's like, well, actually, if we just look here, this kind of looks similar, right? It went down a little in mid-August and then started to move back up. Went down a little mid-August, started to move back up. Of course, this is both, you know, had earnings that day, basically August 13th and a little bit earlier than that, but this is August 13th. So BBAI's sales being bad, I don't know if that exactly caused fear in Palantir shareholders, given that BBAI has Palantir as a partner. So if Palantir isn't paying BBAI, maybe Palantir isn't doing so well. But all this to say, you can sort of look at these two stocks to get an idea of what might happen next. And right now, it looks like Palantir might break out. Is BBAI a good buy right now? Not really. I mean, it just gets bought up so quickly. It's so whipsawy. It really needs to build some type of flag to get an opportunity to get in. And it's not really doing any type of higher lows or anything like that. So we're looking at the mothership. That's Palantir. The volume's a little lumpy here, but we do have a clean level, and I've sort of talked about this level as well with this little compressed day. So that's all super duper technical. This is what we need to keep an eye on. As far as BBAI, that company could disappear, and it probably wouldn't matter at all to Palantir, if we're being completely honest. Like, yes, I did go over that little sort of pair trading connection, but this company is so small that it's not a big factor. Now, couple pieces of recent news. This 10 billion 10-year contract was in August. That's great. I don't think we're going to get another one of those anytime soon, but also not sure that that's necessarily required in order to get a big move. So let's take a look. I mean, the big moves have really been on earnings. I've certainly given up some moves on earnings as well, but this one was the massive one. So it's kind of great to use a large volume day, because then you can buy, and if the price goes down there, you can just hold, and if it gets below there, you sell, but if it doesn't, you just hold. Of course, I didn't hold here. I sold about 3 to 5 days up, but it was up 40%. So, 30, 40%, blame me, maybe you don't. But here's the deal. This could happen again, right? This earnings was sort of stress-free. The earnings reaction was actually bad initially. This is on the 5th, which is this day, actually. So I remember this day. It was pretty messy. This candle going up and then just coming down quickly. But there will be opportunities like here. Earnings has been the time to look for these clean moves in late October, which will be, actually early November. November 3rd will be the next earnings. So all that to say, you don't want to be holding this into earnings. You don't want to buy right before earnings. So we're kind of at a good point where you have about a month's time to, if you do get positioned in this, you can, as long as you don't get stopped out, which you do get stopped out about, 50% of the time or more. The whole point is you can get stopped out like I did here, and the times you do get it, you more than make up for the stop outs. You get a 10-20% move or more. And if you're a real ride or dyer or whatever you want to call it, you get in, you sell 50% of your position, and then you just let the rest ride. Maybe you sell it when you see a fall like this and it comes back to one of these lines, but maybe you just hold it for over a year and get those capital gains. So that's the spot right now. This video has been deep on the technicals of Palantir, largely because these moves have been so earnings driven. And I don't know that we're going to see another $10 billion 10-year contract like we're talking about here. Of course, if they do get one and the stock moves on it, then we'll definitely pay attention. But I can say this S&P inclusion news was actually sell the news that was in here. So people were all excited that it was going to get included, and then the stock actually sort of cratered. So we're not Palantir experts on this channel, but we do try to look at stocks when they're ready to go, and this one's ready to go. So if you like that type of stock idea sharing, head over to stockscommunity.com. You can try out for $25 for 7 days. Do try to mention the most probable stock to go on a given day. If you're looking for, news bots to tell you every time a piece of news comes out, or 10 different stocks in a single day to trade, this is not the place for you. This is for people who want to beat the market, and also, maybe you have a job, or maybe you have something else that keeps you busy, but you're looking for things you can get in with minimal risk and maybe make 10% in a few days, not 100% in a few days. That's not this place. All right. If you haven't hit that subscribe button, hit that now, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's see what else Chris is saying is up to over here. Gotta love it. I think we'll just skip this sort of analysis here and jump ahead, yeah.
So far, this is how it was done. I did it with plenty other plays, okay? And then once you learn this, once the play break out, then you start learning where the other levels at to get what's called a rinse and repeat, because it might not ever come back down this low again once it finally break. So then you have new levels to take you to new heights in these plays, okay? So listen, guys, I just wanted to show you how and why we're going to hit the targets I set before you, okay? And I want you to choose the strike price, choose the stock, choose the expiration date, and make sure your delta is correct so that I can ensure that you get the right return on your investment. Okay, listen, I'm gonna get you up out
I don't
here.
condone trading options,
make
but
some money. If you got at least
there are a few people that know how to do it.
To spare for coach, please take advantage of this. It's going to change your life. I do this. I couldn't do it without you, though. That's the one difference. I won't leave you out of these big plays. If you feel like you didn't catch Palantir with me at $8, where you're catching Lyft with me here. Uber is already my play. So I already showed you I did this for Uber.
Some point,
it was $10, and now Uber is $90.
Gonna have to talk about Neo.
Uber gonna go from 10 to 100. Lyft is gonna go from
it's not
right
yet
here to 20 and 30. Let me know if that's understood, guys. I'm gonna get you up out of here. Listen, if you like this, please share this. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see the end result, but if you consider the journey, do me a favor. Don't forget to subscribe to the channel. Make sure you guys grab some free stuff using my link below, and I'll catch you guys in the next one. Peace.
All right. You know what? Let's just jump into this Neo now.
Neo is absolutely exploding. I told you guys to buy Neo back when it was $3.50. I told my Discord the exact same thing, and it's pretty much in line with what I've been doing consistently for over a year and a half here on YouTube and as well in the Discord. My students made tens of thousands of dollars on Tempest AI, Meta, Oracle, Broadcom, Snowflake, Microsoft. The list goes on, including Neo. And you can see by the profits on the screen, they've been absolutely printing in the Discord. I have many viewers on YouTube that are also printing, and this is exactly how we're doing it. Neo stock has recently taken off, hitting a 52-week high of $7.71 on a strong trading activity. This comes after a volatile period when the stock dipped as low as $3.02, which I told everyone to buy it when it was $3, $3.50, $4, and I continued to make videos on it. This impressive rally seems to be fueled by real improvements in the company's fundamentals. The EV maker is now enjoying a wave of positive developments, including endorsements from analysts and record-breaking performance. For investors, though, following the stock, these are signs of potential lasting change in the company's trajectory. Is it now the right time to invest? Well, I told you guys it was, and if you did, you went from $3.50 to over $7 in just a few months, which is a 100% return, which is 2x. That's incredible. First, a huge announcement. This Friday, my free masterclass webinar returns yet again, 6 p.m. Eastern Time, 3 p.m. Pacific, this Friday, September 26th. You don't want to miss it. Every student that's ever attended the webinar said they've learned more in the hour they've spent with me than anywhere else. I'll have a huge announcement. I'll be answering your questions. Spots are extremely limited. Every single webinar, I have hundreds of students that can't get in because we have a certain cutoff. So the link to get started is in the information box below to register for this Friday's webinar. You don't want to miss it. Let me show you what you're doing wrong in the market, and let me show you how you can improve it, and let me show you how you can get better. You can see by the profits on the screen that my students are making consistently. This is what they've done. They have shown up to the webinar. They've learned my secrets. They've learned how to do this. And you can see my students in the Discord are doing even better. This is what I want to do. This is what I've set out to do, is to help others understand the market just like you, and help you understand how to get better, save for retirement, trade, and make money. I hope to see you guys at the webinar this Friday. Don't miss it. 6 p.m. Eastern, 3 p.m. Pacific. Link to register now is below. Take action right now. Don't wait. I'll see you there. Let's dive deeper into the key factors that are driving this momentum. And number one is analyst upgrades, a vote for confidence amongst Wall Street. And the opinions can be a strong indicator. And in NIO's case, these endorsements have been coming in thick and fast. September saw a series of positive analyst reactions offering external validation of the company's strategy. This suggests a broader reassessment of NIO's potential is underway. UBS Group made the most impactful move, though, upgrading NIO to a buy and raising its price target to $8.
Okay, there were some analyst price targets. People were very excited about it. That's great, right? So we can talk about that. But in general, this is largely a technical buy. So let's speak to that, and let's jump into a little breakdown here, because you know what? Even if it's technical, it never hurts to have a little fundamental understanding of what is going on here. All right, here we go. NIO. It is an ADR as well. So and it's hard to be super negative when people are so excited about it. I mean, wow. Battery swap. Okay. Let's jump in. NIO is about to explode. This is the Chinese ADR electric vehicle company with battery swap. Electric vehicle battery costs $20,000 to replace. This company enables you to swap out the battery. It's also at a technical level where you want to buy it even if you don't even know what this stock does, what this EV company does. But I do know a lot of people are very excited about what they do, and they've been buying it since it was $1. So let's jump into the stock. If you are new to this channel, hit the subscribe button, and you will get notified. I promise you only get notified three times a day. So don't worry if there's a bunch of videos.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here is the fundamental reason to buy NIO from the horse's mouth. He literally said he started buying NIO in 2019 at $3. Then in 2020, he bought another bit of NEO at $44, and he never sold one share. So he's still holding, and this is what he's so excited about. Because I was like, why is there so much interest in NEO? He's like, well, NEO has battery swap. EV battery costs $20,000 to replace. The warranty is only 8 years. And most of these EV cars aren't anywhere close to 8 years old, but eventually they will be. And people want to think more than 8 years ahead. So that's a big deal to be able to sell your used car. So that's what he's arguing. 3-minute battery swap is pretty fast. And if you can push a button on your phone, the car will drive itself to a swap station, swap the battery, and bring the car back to your house. And he's talking about China. China is ahead of us. So, I mean, I am listening. 85% of people live within 2 miles of a swap station. That is pretty incredible. You can rent the battery for $100 per month and buy the car $10,000 cheaper. So I guess you don't have to pay for the battery. See, I wasn't sure if everyone was really that excited, but people really are. There's also a law for battery health testing mandate implemented in China, similar to the emissions testing in the States. So there was that VW situation where they were trying to sort of get around the emissions testing, but I don't know if you're going to get around battery health testing, especially in China. They're super strict over there. So that's the fundamental reason. Now let's get into why I was looking at it initially, which was like, oh, here's a stock that, is coiling up. It looks like there's higher lows. At some point, it's going to pick a direction, and it looks like that direction is going to be up. So you can get in, risk 20 cents and maybe make a few dollars or more. So it's like a 10-to-1 risk reward. And on a 5-year chart, yeah, it's gone down a lot, but more recently, that's the level we're at. And we're going to have to get up to $10 whole dollar level to get interesting. But even if it only gets there, you risk 25 cents, you make a few bucks, that's a massive gain. So there is some volume coming in. The volume's not, blow off top volume. It's sort of lumpy, but this is also a weekly chart. So we can smooth that out like that and get a better picture of what's actually going on. You can see how this blow off top was. And yeah, it's had some pullbacks, but this one seems to be holding. So volume sort of tapering off-ish. And maybe if it really tapers off very soon, this thing could go up on big volume. Basically, when the volume goes down, it means there aren't big sellers. Because if there was a lot of selling, there would be a lot of volume. May not be a lot of buyers, but at least if there's not sellers, buyers can come in and they can overwhelm the stock and get it to go up. You can see on a year chart, there's 52-week highs here, so big opportunity. So that's the chart reason to buy it. That's the fundamental reason to buy it. Thank you to Slay the Day for educating me, who looks at a ton of stocks but doesn't look at individual stocks. And then when I do try to look at individual stocks, which I swear I was trying to do that somewhere around here. This is NEO. Okay, they are an ADR. ADRs can be a little sketchy in terms of the financials, but we'll trust in the NEO army. They're targeting this many deliveries, and that lines up with EV projections from XPEV and LI. And now the question is, expanding into insurance could be super lucrative. That's a cash cow. Think like Buffett buying Geico and stuff like that. And then they also have this tariff issue, but they're still moving to Europe regardless. So I was concerned about recent price moves that we sort of saw, and this is interesting, right? Offerings, we always worry about dilution. We actually took a look at that recently over here, I believe. Could be mistaken, but do like to keep aware of this company is so big that it doesn't matter. At least it's not listed here, but does matter actually, because they sold $1 billion worth of stock at $5 on September 10th. So that was pretty recent. That was just here, not that far below the price. And because they raised so much money and because there's a fanatical army of people buying this stock, I guess that was actually bullish, which can be the case even though the price was below the present price. So that'll happen, I guess. And then we were listening to a video earlier about people raising price targets, and Citigroup's on board, UBS is upgrading. So these are real banks, even though all price targets are pretty much picked out of a hat. Hey, you know, that's what we're doing too. We're trying to pick stocks. So this is the deal. I mean, there are challenges. I don't know exactly if this battery swapping thing is going to be real or if it's going to cost so much that, you know, maybe there's a reason that they're the first people to bring it mainstream. Maybe it's extremely expensive to do this. It's better just to have people replace their cars because then they have to buy another car. So, you know, that's sort of always the balance between like the people who are super in the weeds, the engineering type early adopters, and then the investor people who are like, well, fine, but I don't want to buy the stock if you're going to obviate my planned obsolescence or whatever, and you can't make a lot of money off of the company because people stop buying this cars because they last so long. It sounds insane to say, but there's also competitors, right? BYD is huge, LI, Tesla is in China, and there's the regulatory scrutiny from, you know, who knows, from the CCP and the US. Okay, so this is important to have ADRs be sort of in the public view a little bit. They've definitely been extremely volatile and sometimes not in a good way. So hopefully NIO can be very volatile to the upside, but there's no guarantee here. I wouldn't really worry about ESG stuff considering this is a China company. So it's not like a cult American, you know, UK do-gooder company, even though it is an EV company. So maybe you could argue that it's doing better than any actual ESG type initiative, but we're not going to get into that. So here's the stock. We gave the price levels. You know, you could even risk just a few days ago at $7.50, risk 10 cents and try to make $1 or more, maybe $3. So that's what you're trying to do. I mean, you could do whatever you want. I'm just giving you an idea here, but this is pretty obviously a level that's approaching. So there is a reason we're talking about this today, and you can keep drawing it as much as you want, but there's definitely something going on there. I sort of purposefully messed up that top one, but just to say, you know, everyone's levels are going to be a little different, but in general, you see what's shaping up here. So this is not a day trading idea, and if you still like these ideas, even if they don't manifest every single day, head over to stockscommunity.com. You try it out for $25 for 7 days, which is a week, but 7 days sounds more appetizing, you know, try it out. There's not going to be like a bunch of stock ideas every day in it. Like there will be what I think is the best stock idea. So if you just want a bunch of random ideas, you can probably find that elsewhere. I'm trying to give you ones that I have vetted. Try it out if you like that sort of MO. And if you haven't hit that subscribe button yet, hit that, and I will see you in another video.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump into a little more Felix, I think. Although it's hard to.
Folks, you better get ready.
Not
In
like
today's
Charlie,
video,
right?
we're going to break down the latest on the market and plays. And then we're going to get into one specific stock that is incredibly cheap and screaming buy that I believe could change early buyers' lives. As always, we're going to present the evidence, the data, the facts, and we're going to present some strategies and risks to consider and let you be the judge. On top of that, of course, as always, make sure that you're doing your own due diligence on all ideas presented. If you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. And we're going to get right into it with the timestamps down below. But the only thing I ask in return for all of the work that goes into making a video like this is that you hit that like button, and also don't forget to subscribe. Okay, let's get to work. We need to start with the market context. So listen carefully to these
NTLA
headlines from
here.
the AI space. Nvidia plans to invest up to $100 billion in OpenAI as part of data center build-out. OpenAI and Nvidia announced strategic partnership to deploy 10 gigawatts of Nvidia systems. OpenAI, Oracle, SoftBank plan 5 new AI centers for $500 billion Stargate project. Oracle to spend $40 billion on Nvidia GPUs for OpenAI Texas data center. OpenAI and Oracle's $300 billion Stargate deal, building AI's national scale infrastructure. Now, what does this sound like to you? Sounds exactly like this meme that's circulating everywhere. OpenAI sends $100 billion to Oracle, and Oracle sends $100 billion to Nvidia, and then Nvidia sends $100 billion to OpenAI, a circular cycle. Meanwhile, at each leg of the cycle, the companies get a massive boost in valuation as investors get super duper excited about this news. Now, I don't know about you, but when I was a kid, I used to love to go ahead and plug power strips into themselves or extension cords into themselves, and I used to think to myself, I'm about to beat the system. But of course, you never really beat the system. Just like the power strip plugged into itself here, well, many fear that this boom cycle for AI might not generate much real output compared to the cash burned, and they're starting to worry that, hey, maybe this AI ecosystem and all these investments are actually just fueling themselves and fueling the upside and kind of causing an upward melt up that might not be sustainable. Well, certainly this circular level of financing, once it unravels, is going to cause a bigger downside pull, simply because a lot of the money is coming from within the ecosystem. So if any one player decides to pull back on the ecosystem, well, you're going to see a bigger collapse in valuation. But long term, this AI spending is set to pay off in a big way. When you're asking whether this AI spending is all just bullshit, well, think about what it's buying. The assets that it's buying are real. Data centers, GPUs, software IP, recurring contracts. The demand is sticky. Enterprises are locking in not just a few month contracts, but multi-year AI adoption contracts, and companies are building out mega pieces of real estate with major data centers. So again, this spending is on real things, real assets. The demand is ongoing. The productivity payoff is also very visible for companies. They can see productivity today, and they're going to see a lot more productivity down the road. So for folks who are looking at this and they're saying, Charlie, this looks awfully bubbly. Sure, things can have a correction, no doubt. Who knows when that's going to be? But overall, bigger picture, the way that I see this is that these companies have a symbiotic relationship with each other, and working together allows them to accelerate their timelines. And if anything, when you can see these types of investments, well, if Nvidia is going and investing $100 billion in OpenAI, well, that means that, hey, down the road, a lot of that money is going to flow right back to Nvidia, as OpenAI needs to buy a lot of Nvidia GPUs, or OpenAI might work more with Oracle, who also has data centers, and they'll need to buy more Nvidia GPUs. And the circle continues on. And there's also a lot of other smaller data center plays that take a lot of the overflow of demand, and those are going to see bigger and bigger contracts, and they're also going to need more Nvidia GPUs and competitor GPUs.
Tab overload here.
Okay, next, we got to talk valuations. So I've been vocal and will continue to be vocal about the fact that since the stock market is denominated in US dollars, well, a lot of the stock market's performance is kind of a mirage. I don't know why this isn't talked about more, but it's very important. For example, the S&P 500 is up just 13% year to date, which is very solid, but the value of the US dollar compared to, say, the euro is down about 12.8% in that same time span. The US dollar index overall is down a little less than 10%. So again, your dollar's lost somewhere around 10%, and the market is up 13% USD wise. Are those fantastic returns? I don't think so, especially considering that when you sell, you got to pay capital gains taxes, which probably nets you in the red. Now, keep in mind, when you're looking at these comparisons, you're literally just comparing the US dollar to other currencies that are also getting devalued.
This is crazy to listen to a conference
just
call.
So than ours. What if you compare the US dollar to something that's like real money that holds wealth and has held wealth for thousands of years. Like, for example, gold. Well, if you pull up the chart for gold, look at this. It's up 41% year to date. And I know there's a lot of folks that watch these videos and they don't actually buy stocks, and they're kind of scared to because they think, oh, what if I buy a stock and it dips? Okay, well, why is it okay to hold currency that's dropping massively year after year after year and has been doing so for 100 years, but buying a productive asset like a stock that might have a down quarter or two is such a disaster? Just one last point about this. In 1971, as you likely know, the U.S. was taken off the gold standard, and at that point, you had a massive break between growth in U.S. productivity and
a little breakdown
of
here.
the average worker. This is when the
gold standard's important. Gold is up, but I think we don't want to be buying gold, so we don't really need to be talking about the gold standard right now. There's one stock that is about to explode to the upside, in my opinion. It's NTLA. It is a CRISPR stock. CRISPR is a gene editing technology. It's basically like the machine learning, the AI of big pharma. So it's a huge growth opportunity. People are really excited for the life-saving opportunity that can come from the development of this biotechnology. And if you like videos like that, hit that like button, help the YouTube algo find and disseminate this video, and let's jump in.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here is a little bit about the company, and just to get zoned in here and hyped up.
So tell us first of all, just briefly, if you may, what is so new and groundbreaking about this treatment, this development?
Right, so this is the first systemic administration of CRISPR where we actually infused it into the body and inactivated a disease-causing gene in a very, very targeted fashion. And what's particularly exciting about that is that we were able to essentially
inactivated
that gene.
Never heard that.
See that in the clinical effects of these patients. So a major advance in the gene editing space.
To what extent can this be applied to other diseases as well? Is it very broad or quite targeted in terms of what it can be used?
AK, what's the total addressable market?
CRISPR itself can be broadly applied. The challenge is getting it to those particular genes that cause disease. So we started in the liver, which is an area where there are many problems with disease-causing genes, and we've shown that we can reach that very, very successfully. There's other tissues after that we're pursuing, especially the bone marrow, where a long list of blood-borne type diseases can be addressed. And then after that, there's a lot of work going after defective genes in other tissues.
Okay, so the argument for this company having further growth is strong, even though it's clinical stage. So their breakthrough might be applied broadly. And we saw a video, we saw a little bit about what they do, what they are. Why are we talking about it? Well, if we really zoom out on a 5-year chart, we're finally sort of breaking out of a downtrend, okay, with a lot of increasing volume. It's happened slowly over the last 2 years, but suddenly within the past year, and really within the past month, is looking pretty exciting. So this is the volume, September 15th, and if we pull up some sort of just news stream of Intellis, well, Intelia, I should probably say their name right, otherwise they're not going to let me get some employee shares or anything like that down the road. This is a big deal, okay? Anytime you see phase 3, that is serious progress. They completed just patient enrollment, and they're going to report top-line data in the first half of 2026. So that did get coupled with some of these price target raises. They're all sort of, in bed with each other. I'm sure, the investment banks work for these companies. They sponsor their conferences, whatever. They're all together. It's It's obviously all for a good cause in the end, but we do have to be a little cautious saying September 25th, positive longer term phase 1 data. And if we look at September 25th, now we're up here and it actually sold off on the data. So the phase 3 enrollment September 17th was important right here. But then, you know, data itself can be a little bit sell the news. So all that to say, this is the actual press release direct from the company. This is from where it got disseminated. I don't know why these are in reverse chronological order, but sometimes stuff like that happens, depending on who they paid to promote the company. Because at the end of the day, this is still just a stock. It has executives. They're paying people to disseminate that information. You know, they might be on the payroll. It's above the board, investor relations and all that, marketing services. But the point is, we're not really here to be Mother Teresa or anything like that. We're just trying to see, you know, we can do that on our own time. Do you want to buy this company because you think the stock's going to come up? And there are concerns with buying pharma and biotech companies. I mean, HIMS is obviously not as sort of wholeheartedly exciting because they do like basically boner pills and stuff. But this thing dropped down a bunch on this no longer, you know, total support from Novo Nordisk on their Wegovy GLP Ozempic product. So I should give them a little more credit. They also help with weight loss, which is super helpful as a precautionary step towards not getting all these diseases. But it is exciting to see a company that specifically is deep in the weeds of helping turn off these genes. So anyway, we're stoked on the technology. We're stoked on the volume. This is September 18th. This is the phase 3 enrollment. That's extremely scary if you're short and you hear phase 3. You don't want to touch it. And we're longs here, so we do want to get in and risk $1 or so, and you know, and make a few dollars, if not a lot more. So in terms of levels, if we go back to 6 months ago, a little more than 6 months ago actually, these guys probably sold down here, but there may be some bag holders here. So this volume profile is sort of relevant. So all that to say, if you risk $1 and you can pick your left side peak, whether it's this one at, you know, 1630, or maybe it's this one at, you know, 1770, depending on where you see this video, if we've already gone up a little bit or if we've gone down and consolidated, or, you know, this could just sell off. Okay, that happens, all right? 50% or more of these ideas are wrong. And I believe I'm in the top, you know, decile of, I'm definitely in the top 10% of stock idea people, but, you know, I'll take what I can get. Throw me a bone. Say I'm in the top 50%. Maybe I'll like your comment. Here's the deal. Get in this. You risk $1. You make 10. That's the name of the game. And even if you just get a 3-day burst, it might not be on a news event like this. Here we're kind of looking for a momentum event. So it's more like kind of a flag like this, where a momentum event is like this. It's a little choppy, but if you're in there for, you know, 3 days, 5 days a week, you can still get that 10% or more. I mean, this is actually a lot percentage-wise. It doesn't look like a lot, but for a company to basically go down 70% and then go back up 180%, of course, you know, to get to the same price that you went down 70%, you actually have to go up 350%, which is why drawdowns are so impactful and deleterious. This is the opportunity, okay? Risk $1 and you might get stuffed out, you might not, but it's a tight flag. Looks like this, roughly. That's kind of what we're seeing here. And the more people see that, the more it is self-fulfilling and likely to actually happen. Might be boring not to invest in the technology itself. Might be boring to have risk levels, but I promise you, making money is anything but boring. So that is the stock. It's a little bit about what they do. CRISPR, okay. we don't have to really pretend that we're biotech heads. I mean, this is so basic that even if we pretended, people would laugh at us anyway. But the phase 3 is a big deal, and yes, they're losing a bunch of money. They did have some revenue, so that shows some promise. But with biotechs, you kind of just have to throw the money losing out of the window, because that's what they do for like 8 to 10 years, and then they get acquired, or they start selling a drug and have billions of dollars in revenue all of a sudden, or they get into some sort of royalty agreement with like a Pfizer or a Novo Nordisk and license their technology and get milestone payments for, 30 million and then 100 million. And it's a real lumpy sort of revenue cycle. So they're a big market cap company, and they just had that phase 1 data come out, which they sold the news, so it came down a little that. But that phase 3 enrollment has happened, and now we just have to see what exactly happens. These are its competitors. I don't know why I'm highlighting phase 1, just sort of to highlight that that's what I'm talking about. But we can look at these tickers quickly. CRSP, Beam, and Edit. Edit is a cool name for a CRISPR company, right? Edit looks like it is turning up. Actually, it looks okay. Sure. CRSP, they all look sort of similar. Beam is probably the least interesting of them, just because it's gone sideways for so long. So maybe you're getting a bounce off the moving average, but it's kind of choppy, so I don't really know what to do with that. So these ones, though, slightly more interesting, but also not a ton of volume at all. 5 million, 50 million a day, compared to the one we're talking about, which is up in the 150 million, 200 million a day. So this can have more momentum. There's going to be more eyes on it, and that's why we're talking about it right here. Gave the price levels, gave the possible reward, sort of talked about where to risk off of, although these people probably sold, so this is more visual rather than actual volume, although we can see it up there. So do be aware, if it gets up to 23, you have to be ready to see if it's going to be worth selling some. So this may be boring, but this is the name of the game. And these are big companies, okay? Pretty big companies. And of course, the risks, we talked about HIMS. There could be challenges where biotechs just gap up based on weird trial results, bad trial results. There can also be regulation that is applied to this specific company, or just like the basket of companies working on this CRISPR. So, gene editing is pretty publicly controversial. So anything could happen there. And then there was this as well in 2024. That's with RGON. So March of 2024. Let's take a look at that. March 2024 for this company, RGEN, would have been back here. So this actually didn't really have any sort of major issue. I mean, definitely went down, but it wasn't like a type of HIMS sort of down. It was just a horrible gap down overnight. So you at least have time to get out. And then over here, yeah, this is sort of down after this lost the partnership. So definitely had an effect, but it sort of gave you a chance to get out. I know this doesn't look pretty to go down like, 10% a day, but I'm just giving you just how scarring this can be. I mean, just imagine losing, whatever this is. This is 30%, 40% in like overnight. So all this to say, there's a ton of opportunities with biotechs, but you have to be really careful with position sizing. So if you like these sort of warnings, if you like these sort of stock ideas that are very optimistic, giving ideas of buys, but also some context, head over to stockscommunity.com. Try it out for 7 days for $25. We're trying to beat the market over the course of a year. If you're looking for like daily, intraday ideas. The stock just went up 200%. That's not really the vibe here. And idyllically, the people who work in this community are maybe a little more busy, because if you're more busy, then you're not distracted by the hot stock of the day, and you actually probably over the long term have better returns, which is what we're all about anyway. Not losing a bunch of money day trading. So give it a shot. It's $25. And if you haven't hit that subscribe button, go ahead and hit that. And I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, what else is cooking over here?
Everyday average American worker got totally screwed. Why did this happen? Well, because President Tricky Dick Nixon decided that the U.S. government and the Federal Reserve, the beautiful central bank, needed to be able to control its currency, print endless amounts of it, and be able to finagle it all around the world. And so what did they do? They decided, okay, we're going to make it a Fugazi currency. It's going to be a beautiful Fugazi. And the result of this is giving capital holders a massive, massive unfair advantage over the worker. Before Tricky Dick removed us from the gold standard, well, productivity and wages rightly tracked very, very closely with the economic growth of the country, which means workers benefited proportionally. The rich were getting rich, the poor were getting rich. If you were working, you had a job, you're getting lots of money. Well, after the Tricky Dick, after that, government and central bank policies allowed for extreme levels of dollar erosion, high inflation eroded wage gains, while financial assets, stocks, real estate, so on and so forth, persevered and multiplied wealth for asset owners. And also this Fugazi money also made it way easier and capital way freer to go and move all around the world and allow
NVTS, anybody?
Incentivize them to
Semi-stock?
which also gutted the average worker, but this is a story for another time. The bigger picture here is if you understand this trend, you understand
Looks
that this
interesting.
is only going to get substantially worse with the creation of AI, the continued devaluation of our currency, and the continued massive debt issue that we have in the United States. The people that benefit from this Fugazi currency and Fugazi system that we have are the people that own actual assets. The people that get hurt are the people that are going to lose their jobs because of AI, the people that wages aren't going to keep up with the inflation, and so on and so forth. So if you want to protect yourself, if you want to make sure that you're coming out not just the same as you are today, but way better, you need to be investing in the right stocks, and that's what we're fired up to do, and I'm going to do my best to make sure to bring that to you. Okay, let's go on to ideas. So we got to start with RGTI.
He is fired up. You got to give him
an arms
that.
race out there to develop quantum, and RGTI has been one of the main quantum plays we've been highlighting basically all year. I tried really, really hard to get this idea in front of you and present you as much evidence as possible because there was a lot suggesting that it could be a big winner. Just for example, back in April, we screamed buy the dip because we believe this would bounce back aggressively. It was at about $8.57 at the time. On June 1st, it was trading around $13. We made the same arguments again and we screamed it was a buy. And then just a bit over a week ago, we made another video outlining the overall trend line it was following quite beautifully and explained how this stock was looking set to change lives. And as of today, this is what that same chart looks like. And it almost hit $35 at highs today. Now, if you followed the media's opinion on this stock since all the way back when we talked about it at $8 plus, well, what did they say? They said, sell, sell, sell. Quantum is unfounded hype, as if every new technology that people are developing is an unfounded hype when they start. Folks, I just got to tell you, look, this is yet another of many, many examples of why it's so important that you're not just a media
Hard to argue with that.
And you're actually doing the work yourself and you're looking into the numbers yourself. So shout out to folks who played this successfully. I want you to give yourself a big pat on the back. This was yet another one of our evidence-backed plays. We've had 5 very clear arguments ranging from market
I'm not laughing at Charlie. I'm laughing because it is kind of true.
Mode, their customers and partners as
Every
well as
startup
their financial
is
backing.
startup at
This
some
was
point.
not a pick at random type of stock. This was a stock that was backed by a lot of evidence. Nothing's ever guaranteed, but shit, this had a lot going for it. Next, we got to talk about LAC. Now, if you're in the Discord, we talked about this one in the pre-market briefing this morning, and the reason is because the Trump administration just proposed a stake in them. Quote, the White House proposed an equity stake as Lithium Americas renegotiates the terms of a $2.2 billion loan from the Department of Energy for its Thacker Pass mine in Nevada, a Trump administration official told CNBC. Reuters first reported the equity stake proposal, blah, blah, blah. Now, what is LAC, Charlie? Well, this company, Lithium Americas Corp, focuses on the developing, the building, and operating of lithium deposits and chemical processing facilities in the U.S. and Canada. Now, as you know, we've been working really, really hard to give you government-backed companies and companies that the government is trying to take a stake in or considering taking a stake in, and that's how we called out INTC and MP and a few others before they had massive runs, or largely before they had massive runs. And this was another one that we called out. We were a little bit late on this one. I think it was like halfway in the pre-market. But what do you need to know about LAC? Well, for starters, this is a play in strategic mineral security. Lithium is classified as a critical mineral. Control over LAC's Thacker Pass deposit helps the U.S. secure domestic supply and reduce dependence on China. There's also the energy and AI infrastructure angle. Of course, AI.
Okay, yes. LAC went up today. Kudos, kudos. But let's move on a little bit here. I think you can't just think that LAC is going to do it for you in and of itself. So here's the idea. NVTS. And this company does have that Nvidia connection, which never hurts. It's just a partnership, but still it is legitimate. So scalable power delivery is pretty important. All right, let's jump in and talk about this ticker. Do a little breakdown here and take a look at the chart. If you do drop any questions on YouTube, we'll be able to see those. And right now we are getting into the final sort of home stretch here. Okay. There's one stock that is about to jump up in price, in my opinion. The stock has a partnership with Nvidia to use its high voltage scalable power technology to deliver Nvidia's GPU throughput to companies, entities that need that power. So think like ChatGPT needs a ton of power. So pretty huge partnership with Nvidia, and this company, Navitas Semiconductor, NVTS, is setting up right now as an excellent buy opportunity technically, not just fundamentally given the Nvidia news. So if you like this kind of stuff, hit that like button and let's get into it.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here is the chart. It looks pretty, okay? Sort of got back over this 20-day moving average, held it again, and now the moving averages are all converging. Well, the relevant ones. The 5-day is above the 10-day, is above the 20-day, is above the 50-day, just barely. So this is the time where this thing can really go up. And it's well above the 200-day, which is the one that everyone sees on every chart. So we do want to make sure we're looking at stocks that are above that. So if we look back, there have been some times where, look, these moving averages came together and then things didn't work out okay, but this is a special situation because it was an earnings reaction. So we don't want to be holding stocks into earnings. But in general, the whole idea is if you get an opportunity where you see a sort of triangle situation happening and, you know, some of these things work out, some of them don't. But the point is, if you get in on one of these days, maybe you risk 20 cents, you know, you make a few dollars. Maybe you sell half up here and then you get greedy and then you sell half as it starts to come down. You do that enough times, you can really turn over a portfolio and you're doing better than investing in SPY. And you're doing better than a lot of people who are trying to find the next, LAC. Maybe you'll find it, maybe you won't. But putting your whole portfolio in this and just praying that you get a double or a triple is pretty juvenile, in my opinion. So here we go. This is the opportunity here, and we'll jump into what this company does just to make sure we're not being irresponsible. Next generation power electronics. Don't really know what fabless means, although it sounds great, right? It sounds super new age. They develop circuits and they're very energy efficient. So that's a huge deal because energy is a serious problem. GPUs need to be more power efficient. And they also enhance charging speed, which is also great. I don't know exactly what we're charging here, but pretty much every type of electronics needs to charge up to be used. I mean, even your laptop does need to, right? So, and there you go, mobile phones and laptops, consumer electronics, data centers. That's the huge growth opportunity. Electric vehicles as well, but that's sort of less exciting right now as data centers as an investing opportunity, given the massive compute requirements of LLMs. It's even insane to say that out loud, but that is actually what's happening right now. Almost 100 million revenue, increased a little bit. Net loss is pretty insane. And Q2 revenue was 15, so if you annualize that, that's 60, so that's down a little bit. But this is the right sort of areas to have revenue in going forward. So they do have this NVIDIA partnership. They're contributing to NVIDIA's architecture, enhancing the power delivery. So basically, getting power from the wall or from nuclear plants or from solar or wind and even from, dare say, coal and natural gas into these data centers, into these server racks, into these GPUs, into these chips, and then moving these bits around and powering ChatGPT, which I'm using right now, sort of literally in a meta, not a meta, sorry, but OpenAI type way. So here's the deal. They are involved with fuel cell as well, so that's a hot sector. But I'm going to stop yapping and also stop getting too into the details, although it's super interesting what they're doing, because all that really matters is the stock price, right, for us. So this catalyst was actually a while ago with Nvidia. This was in May 22nd. So if we look at the ticker in May, that's back here, and this stock basically went up. Okay, this is the catalyst, the Nvidia partnership, massive double, and then it doubled again. But since then, it's sort of held there. Okay, it's actually at the same price since that Nvidia bit got announced, but we might get another crazy announcement like that as well. Like the Intel, Nvidia's investment in Intel, which made Intel go up 60%, which might not seem like a lot, but it is for a huge company like that. We might not get that. So this might just be interest. There is volume coming in. Significant amount of volume for very little news. I mean, this volume could be sort of attributed to an earnings, buy before earnings. You could possibly say this volume is attributed to rebalancing right before the end of the quarter, which is today, as of the time of this recording of this video, September 30th. So, but whether it is or whether it isn't, if we look at the semi ETF as a whole, there wasn't a ton of volume in the past 3 days. So, maybe big funds don't buy Soxel, which is a 3x semi ETF, or maybe big funds don't buy this at all because it's only, $100 million a day that trades. But whatever's going on here, it's probably good. Okay, most likely good. We have a risk level That risk level goes back to probably year 680s. Sort of held that in, broke through it, and then came back, and then used that as resistance, broke through it again, whatever. The stock goes up and down. We don't know exactly what's going to happen here, okay? That's why you're watching this video in the first place. That's why I'm making this video, to cement it in myself, in my own head as well. But what we do know is that if we pick a good spot that is very important, this is definitely an important spot. If we don't pick an important spot, if we pick a random spot, like, this would be sort of random somewhere in here, like 650. I mean, at least it's a whole dollar level, but if you pick a random spot, maybe you get in after it's just started to bounce. Maybe you catch this move, maybe you don't. Maybe you catch one of these and then you just have to sell out. So what we're trying to do is pick spots that everyone can see. This seems like something that everyone can see. It's pretty much a $7 whole dollar level as well. So you can risk 17 cents versus 20 cents and try to make $2 up to 917, which is the first blue sky high. And then, well, that's basically all-time highs, isn't it? No, 52-week highs. Since it's de-SPAC situation, which we don't need to look back there because these people would have sold. Okay. Now, people will see this, so if it gets up here, there could be a test here, but it won't be of people actually selling here. You can see there's very little volume here, and in reality, this volume isn't even still here. It's all been redistributed down here. So that is the places to buy it. We've talked about the Nvidia partnership connection. We talked about this earnings as well. So this was a decrease from last year, but this is a big deal. Okay, strategic shift to AI data centers and energy infrastructure. And this is a big deal too. 100 million capital raise. 20 million shares may or may not be a lot for this company. Should be on here in terms of size, right? So if a company trades 150 million publicly traded shares, then they add 20 more to that. That's really only like a 10 to 15% increase, right, in terms of number of shares. So it's not going to totally depress the value of the stock. This is actually could be pretty bullish, and I'm not sure exactly when this happened, but if we really dive in, we can say exactly when it happened. And we can say they raised 50 million, 100 million right at the end of June. So that was right here. Yeah, so maybe the stock went down a little bit, but you can see there was immediately interest again. So don't really have to worry about dilution and shareholders selling, insiders selling or issuing new shares too much in terms of lowering the stock price, because that doesn't seem to be a problem. So yes, we could dive deep in here and take a look at every single sell from every executive, but at some point we have to sort of hang up our hats and say, hey, some of these sells are absolutely unrelated to any type of information about the company, and he might just need to sell some stock to pay his kids' private schools, or he might have this on a schedule where this was already scheduled to be sold, and sometimes that will say down here whether it's scheduled or not. But regardless, if there's a big sell, it'll show up. 500,000 shares is, a third of his position. He is I don't know exactly what his position is. He's a director. If we really looked into it, we could see who exactly he is, but 500,000 shares is not a lot compared to a company that trades 40 million shares in a single day. So don't really have to worry about a $2 million sell on any particular day when there's maybe $100 million transacted. So it's good to be aware of dilution, but also good to know when it doesn't matter. So that's the reason to buy this. It's not a biotech. We don't have to worry about some crazy trial coming out. There's sort of an opportunity to buy, which I outlined pretty clearly around that $7 whole dollar level. We talked about the Nvidia catalyst, and all you really can do at some point is say, hey, what are the other companies that are sort of similar? these are actually sort of privately traded, but these ones, ON and maybe MXL. I mean, these are pretty specific at this point. This doesn't trade a lot of money at all. This is like, you know, a few million a day. So you kind of just have to, I mean, this is a bigger stock, but it's not really doing anything interesting technically. So sometimes you just have to separate buying a theme and just say, look, this is obviously hot. Nvidia stocks are hot. This is an Nvidia stock. I mean, it's not an Nvidia investable stock, but it's Nvidia partnered with them. It's at an entering spot, which we've talked about in detail. And at some point, you just gotta stop analyzing the stock and say, maybe it's worth taking a stab at it with this close risk level. So if you like these type of stock ideas, head over to stockscommunity.com. Try it out for 7 days for $25. See if you can see a ticker get popped in there that performs well. See if you can kind of see which tickers get mentioned in there. If you're looking for like a dozen tickers or, you know, multiple tickers even a day and intraday commentary and all this, it's not a party in there. This is for busy people to try to get an edge and beat the market. So give it a shot if that's interesting for you. And if you haven't hit that subscribe button, hit that, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Let's jump back into a little bit of analysis here from Charlie.
AI data centers are energy hogs. Lithium batteries stabilize grids by storing renewable power. Government see LAC's lithium as essential to scaling AI-ready infrastructure that's actually reliable 24/7. And then you have national competitiveness. Just as the U.S. is protecting AI chips, Nvidia, and so on and so forth, it wants to secure lithium to avoid foreign choke points in the AI energy supply chain. This is all about controlling for choke points. If China has all the lithium, well, guess what? They can just choke us off and we have a big, big issue. A lot of people say, oh, you know, the government shouldn't be getting involved in this. That's fine, but you need to give up your power to China because these companies aren't going to do this on their own. And if they're backed by Uncle Sam, they've got a rocket up their rear. It also has a world-class asset. Thacker Pass is one of the largest lithium reserves in North America, giving LAC decades of production runway. And then there's alignment with big players, government support, GM's prior investment, and likely off-take deals reduce risk and validate demand, especially as automakers and AI firms push for energy storage. Now, one of the things you got to keep in mind is that a lot of these government-backed plays, right after they get government
kind of already broke out, so I even hesitate to talk about it.
With MP Materials and Apple, and I think you're going to see another thing like this here, which is going to provide another potential catalyst if that materializes. Okay, let's talk Hood.
Could
so
pull
as you know,
back,
we were one of the first, if not the first people on YouTube to come out hard for Hood at just around $18 a share early last year.
What we want to do here is just pick a different stock.
A big warm shout out to folks who played this correctly and did well. But again, I want to highlight the fact that this was not a shot in the dark. It was an evidence-backed play. So anyways, the evidence here, look, we've been talking about for a while. This is a company with visionary leadership, willing to remake and lead industry, and has been doing that for years. It's exponentially expanding its user base and engagement. It's got a beautiful diversification of revenue streams. It's got a rock solid balance sheet and financials. And that's truly what sets you up for this win. Not gambling, nothing like that. Simply looking at evidence. Okay, next we got to talk about Alibaba, Baba. So Baba was up some 8% today, and it's continuing to fill in the recovery gap that we've projected, but I believe there's a lot more to go. We've been right on this stock since really March of 2024. It was slower than I wanted it to be in terms of recovery, but look, it's been pretty consistent, and there's a lot of upside to get back to a fair valuation. And with Jack Ma back at the helm, I think it's going to be a very, very hard one to ignore. We put out a price target forecast for Baba this morning in the Discord, and I'll leak it for you here without the price targets themselves, just because I want you to see the bigger picture here on growth and the different segments they have. There's quite exponential growth to be had.
Kathy Wood bought Baba.
All around the Asian markets. Their cloud computing segment, their digital media and entertainment segment, and some of their other miscellaneous segments like logistics, fintech, and such and so forth. This is a company that's trading at forward multiples that just don't make sense, and I'd argue there's a lot of upside to be realized here if you're patient. Now, I'm not a big believer in having huge exposure to China or any kind of foreign markets, but I do like having a little bit, and this is one of the ones that I would say is probably one of the more obvious killer deals in that market. And look, it's already nearly 3x from the 2024 prices when people said it would never come back. Look, it's come back. If you look at the history, Alibaba does tend to have pretty big support cycles, and then they recover and they get back to a longer-term trend line. I think that's going to happen here. I think you've got a lot more valuation to fill in. Next, we got to talk about HOND. So in the last video, we spoke about how HOND is in the process and preparing to take Terrestrial Energy Inc. public, and broke down how this nuclear play was on a short list of stocks that the Department of Energy, the DOE, has selected for a key pilot program. We talked about how this was actually one of only 2 publicly tradable options here on this list, meaning if investors wanted to benefit from the DOE order, the Uncle Sam backing, they only have 2 options. They could buy Oklo or they could buy HOND, but Oklo very, very pricey because it's already run so much, but a lot of people are scared of HOND because HOND is a SPAC, and SPACs are kind of like pre-going public entities. You buy HON today, it ends up buying Terrestrial Energy, and you own shares in Terrestrial Energy. But anyways, when we posted that video, HOND was at about $13.95, and this morning it hit over $18 at highs. Now, just so everybody stays grounded here, here is the upside picture we see for HOND. We're looking at the potential anticipatory run into the combination with Terrestrial Energy Inc., which looks like it's going to happen in Q4 at some point. We also see the long-term upside as Terrestrial Energy expands with government and regulatory tailwinds, and we also think it happens to be likely underpriced. Many people don't like to buy SPACs pre-merger because they're scared and they're worried about the combination and regulatory hurdles and so on and so forth.
Yeah, I mean, I don't want to buy a SPAC right now. Chamath just came out with a new one though. So here it is, guys. HIVE, crypto mining company. Is HIVE pivoting into data centers? That's what we want to know. A lot of these crypto mining companies are doing that. High performance computing. There we go. More energy efficient. Okay, so let's jump into this breakdown and see what we can get going here. A lot of volume. And then on a 5-year, whoa, insane volume. All right, let's jump into a little breakdown here. There's one stock that is about to rocket. The company is HIVE. It was a crypto mining stock. They've pivoted, like a lot of crypto mining stocks have, into AI infrastructure, which is more energy efficient and offers a higher revenue opportunity right now, aka not just OpenAI has massive requirements, but even if it was only OpenAI, they're going to spend like $50 billion a year on data center, on compute. That's going to trickle down into not just Nvidia GPUs, but also the companies that those GPUs connect on, the server racks, which compose the data centers. HIVE is at the center of all of this. Let's jump into why it's at a favorable place to buy right now, and also what it is they exactly do. If you like this type of video, hit that like button.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here is the chart, and it's pretty attractive given all this massive volume coming in. You know, the volume trailed off, but it held higher lows, and now here we are again, getting up at an important level where we started to go down back at the end of 2024. And when I say we, if I look at some other plays, they all, well, this one actually dropped more at the tariff starts, but these are some other crypto miners that sort of pivoted into AI data centers, and you can see that they've absolutely rocketed. They've had tons of volume since then. Galaxy Digital, another one. This is sort of like a hedge fund, Frankenstein type holding company situation, but they're very crypto oriented, and they're sort of an analog to this HIVE company. See, they're a financial technology company. This DEFT is, and yeah, Galaxy Digital is actually buying this company. All I'm saying is that all these companies are basically doing a mess of different types of transactions, and all that we can really say as far as these crypto mining companies is which ones haven't gone up yet. And HIVE is one that definitely started to, went from 2 to 4. But again, if we look at some of these other ones, Cipher went from 2 to 12. Even Mara and Riot have more than doubled. Well, actually, Mara hasn't at all. But don't let me get you down here. Let's take a look at exactly what this company does and why it's interesting to buy. Okay. Here is the chart in the last few months. Well, really just the last month it's gone sideways. And it's starting to break here and sort of have a change of character. And, you know, just to sort of cross all our T's, why has Riot gone up and not Mara in the last few months? There was probably some type of negative news related, but as far as HIVE goes, okay, they're in the same bucket of companies. BitF is another one I didn't mention, Bitfarms, which also had a massive move up. So this is definitely the theme right now. And I think HIVE is interesting because they're not really as talked about, okay? And this Galaxy Digital company securing $1 billion financing is a ton. And this company, CoreWeave, has been super hot. And they actually just had a piece of news today that finally made the stock go up. And we kind of thought, you know, CoreWeave was left for dead here after this IPO move, and then it came back down. But it turns out here was the deal with Meta, and it's a big one. Meta's kind of playing catch up, and they just made a $14 billion deal with CoreWeave for AI cloud infrastructure, which will help pay off CoreWeave's like $9 billion of debt. There was some concern about if CoreWeave was sort of like just pushing out this debt and not able to actually get customers, but I guess we solved that answer. Here's $14 billion. That should solve that debt for the next year or more. So CoreWeave's looking promising all of a sudden. Can't in good faith tell you to buy it now because this deal just happened, so it already went up. But I did mention it last week. Now, this is the one I'm trying to mention before something happens, and it's HIVE. Okay, could this be the next CoreWeave? Could this be the next Cipher? Could this be the next Riot? Could this be the next Bitfarms? Could this be the next Galaxy Digital? I don't necessarily know exactly why. You know, this is the space, high performance computing, that they're all pretty much related to. Bitfarms had a big move, so that makes sense that Riot being invested in Bitfarms would make Riot to go up as well, whereas Mara would not. Okay, that sort of makes sense if there's that connection. Oh, and this would really do it if there was a serious debt offering. Oh, this was more than 18 months ago. So I think we just mainly have to chalk it up to this Bitcoin stake right here, Bitfarm stake, because Bitfarm went crazy. Sorry, a little side quest there, but sometimes you have to know why a company skyrockets. Well, it's sort of sympathy company does not. I mean, we can see that they sort of moved in lockstep. This went up, this went down, you know, this went up, this went down, and then only recently have they separated, kind of like MicroStrategy separating from Bitcoin. People always say MicroStrategy looks terrible in the past few weeks, right? Months, rather. So here's the deal. We're not trying to just talk about a bunch of random information here. We're trying to say Here's an important level to buy. This is sort of breaking this downward trend. You don't have to believe in buying that way, but you know, some people like to just say, hey, draw a sideways line. If it gets there, I'll buy it. You know, if it doesn't, I won't. Fine. But I'm just saying there are opportunities where, say this comes back and touches this moving average, you can buy it with really low risk. You know, it did wick down here. This is in 24-hour charts. This includes overnight moves, which you may or may not stop out on. That's at your discretion. But you can get in, risk 50 cents, 20 cents, whatever it is. Make $2, $4, you know. Maybe make even just a 5x on your risk, 5 to 1 risk reward, however you like to call it. You don't want to get too nitty gritty with, you know, how many R's you're trying to get. The point is, you jump in, you risk a little bit. This whole change of character could happen where this thing goes nuclear in a good way, not in like a pullback glow type of way. So that's the chart. This is the last 30 days. And if we zoom out, we can see these levels. $4 whole dollar level is really important, going back to September 24. If we really zoom out, yeah, there will be another resistance up at 670, or at least a visual pivot where people are going to see that and make a decision if it's worth that much or not. And then 7, and then up at 1050. So those are the levels. And as far as what else we want to know about this company before we basically, so this isn't a we thing. You can take this information, do whatever you want with it. It's just an idea, but here's the deal. What happened for HIVE? Okay. That's a lot. If they're able to mine 2% of the global Bitcoin network, that is a lot. They are international, and they're mining 9 Bitcoin a day, okay, with pretty big margin, but it sounds like the margin is even bigger for allowing their data centers to be leased for AI companies. Because, and this is the argument made in 20VC, I guess, that some guest made, I think it was like a CEO of a chip company, was that if you gave it OpenAI, ChatGPT, which I'm using right now, double the computing capacity, they would double their revenue in the next month. Because, like, what am I doing here? I keep pressing retry, you know, as soon as I ask a question. Not only is it slow, it's slow to answer. Well, it's not actually slow, it's just we're so used to things happening instantaneously that if they had double the number of tokens, they could serve this in half a second instead of a full second. I wouldn't have to wait for all this, like, tombstone loading, and then there also wouldn't be that limiting factor where it limits my number of queries. So all this to say, if this is true and it actually is much higher revenue to pivot into data centers, then it makes a ton of sense that they're doing that. They obviously know what they're talking about. If they've mined 2% of the global Bitcoin network or have the capacity to do so, they are right alongside these big names. Again, Riot had a stake in Bitfarms. Bitfarms went absolutely ape upwards in stock price. And they reported a 22% increase in Bitcoin production in August. Okay, which certainly made them go up. So now the question is, now they're up there at $4 a share. Are there risks? They do have debt. Debt can make things move way up and also way down. So we have to be a little careful about that. Part of that move to the upside might have been part of that debt. And then also 50 million, but negative free cash flow of 200 million. I don't even know what that means, despite reporting a profit of 50 million. So they're not actually keeping the cash, it sounds like. In other words, they're building out a bunch of new capacity, or they're trying to pay off that debt. That has to be what that means. I can't think of any other reason. So that's a problem, right? You don't just want cash to be like a biotech. You want cash if you're any type of company. And we don't have to worry about this price decline because it's gone right back up. Renewable energy is great in terms of the global scrutiny on, you know, the problems of mining Bitcoin, I don't think that's a big deal for us investing in this company or investing to make money. And also, yeah, there's pretty much an overwhelming sea of enthusiasm over AI. So these data centers are going to get built no matter what. It just is what it is. You have to buy carbon credits or do something to offset it, or something unrelated to how you're investing. It is what it is. Now, this could be a problem, but again, I don't think that ESG thing is going to stall this given the administration. And it sounds like these AI data center build-outs are going to take longer than 5 years. So even the next administration, no matter who it is, I think this is all here to stay. So they're transitioning. That's part of that big rise in price, not just being able to mine more Bitcoin. They're actually making moves, it sounds like, to build out these centers or convert them. This is a lot of GPUs. And I mean, Canada does have Waterloo, so this is not like a toy project. It's a serious AI hive, like the Oxford of Canada, I guess. And then DeepMind is in Canada, or in Toronto, I believe it was 5 years ago. So here's the deal. They've got revenue from AI GPUs. They're expanding. They've got data centers in all these major countries. I guess they don't have the cash flow right now, but they're moving into an area where we just saw what happened with CoreWeave's agreement, and this could happen to HIVE as well. So CoreWeave had a bunch of that. We're worried about that capacity that they have being actually utilized, and then Meta said, yeah, we'll take that. We need it. You know, Zuckerberg had an idea, sleeping, woke up and spent $14 million. And then that could happen to HIVE as well. So watch for it. The whole point is we're talking about stocks before that stuff like that happens at agreeable price levels, where even if that doesn't happen, you still have a great opportunity to get a nice 3 to 5 day burst, maybe make 10-15%. So half your position, trail half, and maybe hold it for, you know, up to 10, or maybe it comes back down, more likely, right? And then you have to sell half and you're still up on your position. So that's the name of the game. If you like these stock ideas, we'll try to make them a little chiller maybe in the future. Maybe we'll do some flashy graphics and some b-roll, but for now it seems like the type of customer that this type of content is attracting is a good customer who is not looking for day trading tips. You're looking for stock ideas you can sit in for a week or more, relatively low risk. And if you want to hear about the cream of the crop stock ideas and not the 8 a day that I've been putting out the last couple of days at least, head over to Stocks Community Bomb. Try it out for $25 for 7 days. And if you haven't hit that subscribe button yet, hit that and you will be notified of more videos. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.